Welcome to another episode. My name's Jose Najarro, and today we're going to take a look at Groupon. So let's get started. Groupon has lost almost half its market cap since reporting earnings yesterday. So right now it's sitting at $1.70, about 44.2% down. And that's all because of earnings. So let's get started today. And we're going to take a look at all the information provided, and we're going to look at the financial information for the company. Like always, don't forget to hit that subscribe button to make sure you guys get all this content that I'm providing right now. I'm trying to do at least one video a day, so I hope you guys enjoying it. All right, so Groupon gave us two forms of information. First, they gave us an earnings slideshow, and second, they gave us financial results. So I highlighted the important information that I grabbed from these, and that's what we're going to go over. And then we're going to take a look at their financial results in another website that I use. So the first and the most important thing is the CEO and the management team realized that they did not deliver expected, and they say they did not. And they kind of mentioned that if Groupon continues the way it's going right now, it's not going to be good for the company. So there has to be some big changes that have to happen. And that's really the main reason this company is down. One, management says things are looking bad. And two, management saying they need to change things around ASAP and majorly change stuff so the company can move forward. So the first thing that they're trying to do is they're trying to remove out of the goods platform. So if you guys use Groupon, I've used it numerous times, and I think this is pretty cool. This is a very smart thing that they're doing. They're trying to remove, if you guys go on Groupon, you know how they sell products. They're trying to remove the product selling coupon items on Groupon and just focus on local experience marketplace, which I think is what Groupon should be doing. I think that's actually a pretty important thing. So here they say they plan to exit the goods category and focus on local experience marketplace. Best positions us for long-term sustained growth. They are currently right now the market leaders in this local experience online marketplace, but yet they only have 1% of market share. That is crazy. So this company definitely has huge potential to do this. In addition, their 2019 goods category performance did specifically in Q4 did really bad, that it tells them, hey, this is something that we should not focus on and we should go outside of it. And to be honest, right, if you use Groupon, this is one thing that I hate about the Groupon application. It's just constantly scrolling and seeing just products there. I want to see more of local experience, and that's the reason I use Groupon. So I'm happy that they're removing this out of it. And here we can see the wording they've used in their shareholders letter and their slideshow kind of gives this urgency that, hey, this company, if things don't go happen now, things can go even worse. Because here they say, in order to maintain and extend our competitive advantage, we believe that we must act with urgency. Just the word using urgency can really put some form of negative mindset to investors. And they plan to exit their goods category in North America by the end of the Q3. So right now we're just starting Q1. So in the next 3 quarters, they're going to continue to remove the goods category, and globally by the end of the year. And so now they're mentioning what they're trying to focus on. The first thing they want to focus on is they want to make their platform. We're going to take a look at some screenshots. They want to make their platform and their inventory more dense in cities. So if you live in the local area, right, you will see a more dense of all the local restaurants and all the local attractions within it. And they also want to bring their merchants, the merchants that sell those products, to show their full catalogs. I don't know if you guys have been in Groupon. So in Groupon, it's usually just heavily discounted items from a merchant. But instead of just doing heavily discounted, they want to do with the full catalog of that place. So now if I want to go to restaurant A, I know exactly what this restaurant has, not only what's on special. They want to increase their mobile experience. So we're going to see some images. They're trying to make the experience better for customers, but not only for customers. They also wanted to make it for the merchants, because the merchants are the one providing the information for their customers. So they're trying to make this experience easier for them. They're also trying to relaunch their brands. and marketing strategy. So that's something we're going to see. And they're trying to reduce their cost and go forward in their business. So all of these, especially the relaunch and and modernizing their things for merchants and for customers, is going to cost money. And the reduction of goods is going to reduce their revenue. So they're reducing their revenue, and this is pretty much now restarting as a startup. It's pretty much going back to a startup phase where, hey, at least they have some form of platform, they have some form of customer base already. But it's like I mentioned, this is pretty much going now into a startup phase all over again, and that's why we can see this company losing so much, because when the startup phase company, you have such huge risk. So obviously the market is taking that into account and reducing that that market cap by half in the past day. So here you can see that they have such a long-term outlook. Right now they're starting 2020, but they're saying that this is not going to show any true results until 2022, and that's when they have these high single-digit growth, and that's for such a long outlook in time. They say till 2022, so that's 2 years from now. They're only expecting to have high single-digit growth and mid-single-digit growth in revenue growth. So here again, right there, it's pretty much a startup phase company, and with the startup phase company, you usually expect high revenue growth, but here they're not going to be showing that. They're showing very limited unit growth percentage and revenue growth. Single digits is not something that most people look for, especially, like I mentioned, in that startup phase. So next, we're going to take a look at the slideshow that Groupon gave to the investors. And like I mentioned, right, this is for fourth quarter 2019 earnings, which they reported on February 19th, 2020. So here we're going to take a look. Some of the things I'm going to mention come from the previous article that we took a look at. So here, the first slide that I want to take a look at shows how Groupon is a clear leader in the local e-commerce world. They're the top 5. They're one in the top 5 brands for e-commerce. They're one in 5 U.S. internet users come to Groupon every month. And like I said, I use Groupon here and there. And at least once a month, I'm actually probably checking what they have in there. And this is something that I thought was pretty cool. 50% of customer base has been shopping in Groupon for over 3 years. And I think this is definitely going to help out the company with all the new faces that it's trying to move into. Because if these customers have not moved out yet, the chances of them moving out while the company is doing reorganization is probably pretty slim. So having this strong customer base is going to be it's pushing this company outside of that startup phase, which I was mentioning earlier. So that's definitely good news for Groupon. So here, right, like I mentioned, Groupon wants to become a local experience destination. That's the new Groupon that they're trying to achieve. They just want to really focus on local experience for their customers. And this is here they're talking about why they're planning to leave the goods business. And here they say that goods take up 40% of impressions, but deliver 20% of gross profit. So if we take a look at their application, right, 40% of the items in their application are goods products, but they only make up 20% of the profit. So here that's definitely inefficient. And here we can see the decline of goods units and good purchases declining every quarter, right? From quarter 4 of 18, quarter 1 19. Look at it right now. It's just a strong decline in purchase of goods. So I think it's pretty smart for this company to start leaving the goods product. So here in this slide, they try to talk about the 2 main things that they want to do. The first one I'm going to mention is they want to make it easier for merchants to enter Groupon. So they're definitely so that's the first thing. Make it an easier transition for new merchants to come into Groupon. The second is with their current merchants to be able to develop a full catalog, like I mentioned before, and to make it more density based on local market. So now if you live, they're gonna test it out in a few cities here. They're testing it in 10 plus cities in 2020, and they're just gonna try to find in those 10 cities. They're gonna try to find all the local merchants there and try to get them into Groupon. That definitely seems like it can be a very difficult task to do. There might be some stores or some places, some restaurants that might not want to do this. Then they also say, like I mentioned, right, they want to bring a full catalog of the restaurants or whatever merchants are in Groupon, not just the heavily discounted deal. So again, this is going to get more customer base. It's not just going to be the customers that want to have special deals. It's also going to be for customers that want to know what's in the area. And I think this is actually going to be a nice. It's going to be some form of competitor of Yelp and TripAdvisor, right? Because people go to Yelp and TripAdvisors to see what's around. The only thing is Yelp and TripAdvisors are usually just for, well, mainly Yelp are mainly for the food restaurants, where I'm guessing Groupon can be more for like even gyms or other types of stores around the local area. But the thing is, this company definitely has to move fast, because if Yelp or TripAdvisor want to take on this type of idea, it's something they can implement. And by thinking that, it tells me that, right, the idea here that Groupon has is something that other companies can actually take over as well. So here they also mentioned, right, that they want to launch a new application by the second quarter of 2020. We will have a new Groupon application. They want to use machine learning to be able to have an increase in experience for the customers, and they want to be able to improve the customer's journey from discovery to purchase to redemption. And this also application is not only for the customers. They want to make it easier for the merchants to be able to add new items, to add their business into the application, which again will entice more restaurants and more businesses to enter into Groupon. And here these are just a quick first time look at what their new application may look like. And here we can see, right, all the restaurants around your area. And if you click them, you can see what kind of deals you might have for them. And you can also see what kind of menu that restaurant has. And here they have it for the merchants that, hey, you can put in some form of deal that you want to make for if you own a restaurant or if you own some type of business. So again, this is definitely restarting the company, right? Groupon is pretty much at a restart state, and that's why we can see that this company lost 50% of its value in the last day alone. So it's going more into a startup phase, and investors can see that happening, and they know with that kind of risk, this company is worth a lot less money. But in my opinion, right, the changes that they're making actually make plenty of sense to me. If things work as intended, Groupon would actually be a pretty cool application. I'm pretty happy that they're going to remove all those products there, right? Because you spend most of your time there just finding random products, headphones, phones, phone covers that you don't really care about. And that just takes, eventually you get annoyed by that and leave Groupon and try and just start looking somewhere else. All right, so the final thing we're going to take a look at for Groupon is how the financial numbers have looked. And this is a website I use numerous times, Legacy FA, but with the new recent earnings, this actually pulls data from the 10Q report and the 10K report, and it shows it pretty good for me here. But usually when a company reports earnings, they take their sweet time before posting the 10K report and 10Q report. So usually I can't use this website because it has yet to be updated. But Groupon actually was pretty quick, and they posted it the same day. So I'm able to use the website. So here we can see revenue, right? Since 2016, this company has decreased its revenue every year since. Right now it ended at $2.2 billion compared to 4 years ago, 4 years ago being at over $3 billion. So it lost about 1/3 of its total revenue in the past 4 years. So this company has seen a decrease in revenue. We'll take a look at the actual numbers. This company's gross profit has maintained pretty much flat. Right now sitting at $1.19 billion of gross profit. But at the end of the day, this company has not made money. Earnings per share for this company were negative 4 cents, a 4-cent loss, and net income was negative negative $22 million. So next we'll take a look at how the growth is going for this company. All right, so here we can see revenue growth for this company. In 2019, this company revenue declined almost 16%. In 2018, it decreased 7%. And in 2017, it decreased 5%. So this company just, you can see the decrease in revenue decreases more each year. So again, another reason we can see this company continue to lose valuation. But look, a 15% decrease in revenue is it's a pretty bad thing, especially right now when especially here in the United States, that the economy is doing pretty well. So you would expect your average consumer to be spending a lot more money in Groupon and stuff like this, but that's not the case. So it's definitely not an economical thing. It's more of the company just not being able to produce the product for the customer. Next, let's take a look at this company's balance sheet. And here we'll take a look at this one actually. Here in the balance sheet, we can see total assets here and total liabilities. Total assets have been decreasing and liabilities seem to be decreasing with it as well. So that's right now the only good thing to say is total assets are higher than total liabilities. So this company has a positive shareholder equity of about $400 million. And now we can actually take a look at the asset distribution and the liability distribution. Let's start off with liability distribution. This company has most of its liability comes from payables, payable distribution, payable liabilities, which make up about $600 million of this company's total liabilities. The other 325 come from non-current debt. So non-current debt is debt that does not have to be paid off anytime soon. Right, non-current debt at 325 million is pretty low for most companies, but it depends on how this company's asset distribution is. So here we can take a look. This company actually has a decent amount of cash, $750 million in cash. So it has enough to pay off its non-current debt, which is always a good thing, right? You definitely want to be able to do that. So this company has money to blow right now, and it's definitely not a company that would go under at the moment if we take a look at it, right? It has some fire in it that it can continue moving. But we have to see how expensive it is for this company to develop this application, and how much of a slowdown is going to occur, and how much money this company is going to burn. So that it definitely does not have an infinite amount of cash. This cash can go away pretty easily. See, now I'm taking a look at cash and cash equivalents right now, and it seems on average it spends about, let's say it spent on 2018 to 2019, it spent about $100 million in cash and cash equivalents. So let's say it doubles that. So let's say $200 million each year. This company will be able to survive for at least 3.5-4 years. So for 2022, that's 2 years away. So this company has enough cash at the moment to do that. That's pretty much all I have for Groupon. So now my thoughts would be, one, this is definitely a startup. This company is pretty much going back to a startup phase, in my opinion, and that's why we see a huge decrease of the company. Looking at the balance sheet, this company, right, let's take a look. The income statement is garbage, right? This company has a garbage income statement. It's losing revenue each quarter, it's providing no positive net income, and it's providing a lost earnings per share. So pretty much this company's income statement is garbage. If we take a look at the balance sheet, there is some hope. There's definitely some hope in the balance sheet. We see that this company definitely has a nice amount of cash, and it could probably survive definitely about 2 to 3 years with his cash right now. Be able to take out some loans, especially right now in the market that we're in right now. Interest rates are pretty low, so it'll be okay if it takes out some loans. The only thing is this company is going to be spending a nice amount of money redeveloping this application, And if we have some screenshots on the application, it means that some of that cost might have already incurred because they might have developed some of it already. The movement they're trying to go to, I think, is a great idea with how Groupon is at the moment. But I do think that it has strong competition. Like I said, if Yelp or TripAdvisor can somehow get into this, it can definitely knock out Groupon pretty quickly. It just depends on how fast Groupon can do it, and that's why I see that they mentioned the word urgent early on. We talked about it. So this is one of those companies that I would invest a very little money if I was to, because it definitely has the potential to grow, right? Because this is, like I said, it's going into a startup. If this works out, could be a really, really good thing for Groupon, and it can definitely return a lot of money. And the good thing is this company has lost 50% of its earnings, of its market value already. So I hope, like I said, I hope you guys enjoyed this episode. Groupon is pretty crazy how this company is shifting out pretty quickly. But make sure to subscribe, guys. Let me know what you guys think. Take care, have a good night, and see you next time.